Good morning. Morning, voice check. Morning, Peter. Morning, Road. Morning, Comfortably Crumbs. That's a good name. Morning, Paul. Morning, Robert. How we doing? Happy Monday. Sorry, I'm a bit late. I was watching a video about a rant. Somebody ranting. Usually it's what happens on YouTube, isn't it? People rant. Right. So this morning we're going to go through the usual stuff. Have a look at all the FX pairs this morning. Go through one by one. Have a look at what's going on with them. Have a look at the news coming up this week. Have a look at the usual stuff, basically. Trade the DAX and the FTSE. Just a quick recap of Friday. Pretty good day on Friday. Banked 1400. Wasn't particularly exciting on Friday. It's fairly easy movement, but not particularly big, and a bit whippy in the morning, which is why it wasn't a particularly profitable day. But we had a nice clean break to the downside eventually in the S&P. I think that one broke to the upside as well, didn't it? Yeah, so we broke to the upside, stopped out, broke to the downside. The Dow was a clean break on the Dow. So that just went straight down. Didn't really get very far though. So target and then break even. And NASDAQ was also clean break basically, but didn't go anywhere. So wasn't particularly exciting on Friday. The problem was we had this whippy open in the European indices. So started the morning basically at a loss. So we'll see where we go today. So markets breaking up this morning. Hopefully we'll be getting an ORB on the 5. Yes. Oh, just about. That's actually really close. Got 1 minute left. There we go. I think that's probably going to be enough for 15% of ADR. DAX looks a little bit small. Yeah, DAX, I don't think we're going to get a break. So we'll have to wait and see what happens with that one. Right. We'll wait for those to kick in. So today we've got basically no news. It's a bank holiday in Japan and there's no news scheduled. So it's going to be a quiet morning. CPI basically for New Zealand came out last night, although it's kind of pretty much the first thing that happens on Sunday night / Monday morning. So that came out negative. We were at 0.9 on inflation. We were forecasted to come down to 0.6 and it came down to 0.5. So dropping a lot faster quarter on quarter than was anticipated for the New Zealand dollar. So that leaves them open to dropping interest rates a little bit more. They're sitting on 3.25 at the moment. So overall, that will be negative New Zealand dollar. Probably medium long term should be negative for the New Zealand dollar. So as you can see, when the news hit, we got a very slight tick down on the news. It was more of a whipsaw than anything, really. But it's recovered so far this morning. So it's not really showing any signs of big negative movement at all. It's just literally gone down by about a quarter of an ADR and pulled straight back to where it was. So market not really paying much attention to that this morning. As you can see, we've got on the ADR dash, Aussie New Zealand is an ADR, but that's kind of because of this broker sort of candle. That's the move against the New Zealand dollar, but that's retracing straight back down again as well. And Euro Swiss as well is another ADR this morning. But if you look at that one, again, it's a huge kind of broker gap, which just got filled within that first hour. So that wasn't really an ADR at all either, if you look at that one. So a lot of this is going to be spread. The spread on this would have been ridiculously high. So there's no real ADRs off of the New Zealand dollar, which is kind of what I was expecting this morning, to see a little bit more movement in that New Zealand dollar, but it's just not happened. So we'll see what happens for the rest of the day on that one. But you would expect that to be short term, definitely negative, but medium term over the next sort of few days as well. It should start to sell off on those numbers. But maybe because of what's going on with the tariffs and things, the market's just not really reacted to it at all. But we'll see what happens when London opens and when New York opens. We might get a flurry into that. So nothing today really wise, trading wise, we're going to see from a scheduled news perspective. Tomorrow we've got Bailey speaking and we got Powell speaking, and there's again no news. So it's a very quiet start to the week this week, today and tomorrow. We've not got anything scheduled that's going to really upset the markets. So we should, you see, a lot of, like, within ADR moves most of the time. But unless there's any shocks from Trump, obviously, which is obviously possible, we shouldn't see anything moving particularly big or fast on news. So Thursday this week is PMIs. Wednesday as well, existing home sales. So there's nothing really front end of this week at all. So Thursday we move into, that's when we get the PMIs. So PMIs, obviously Purchasing Managers Index, that feeds into the Consumer Price Index, feeds into interest rates, which drives the price. So basically these are the kind of level 3, if you like, leading indicator that the market uses to decide where it thinks inflation is going to go, which obviously gives it its directional bias long term. So these are obviously very, very important numbers. The forecasts this time round are pretty stable. There's no forecasts really that are dramatically higher or lower than we had last time round. So the pound is a little bit up. They're expecting inflation or the PMIs to go up a little bit. But apart from that, we should see pretty stable numbers on those. So there's a good chance that we might get some deviations from those and get some big moves. The main news this week is the Euro interest rate decision. 2.15 is where we stand. 2.515 is where we're forecast to go. I don't think there's any reason Lagarde is going to change that, but you never know. So if that comes out as forecast this week, which it probably will do, what we're going to wait for is the ECB press conference, which is half an hour after the announcement. And that's when we're going to find out what Lagarde's forward guidance is, what the plans are moving forward for interest rates. So they have said they were going to freeze interest rates this time round. It looks like they're doing that. Then they will use the data to decide whether they're going to drop or they're going to increase. So I think with this time round, I think there's a good chance Lagarde's probably going to come out and say nothing's really changed. We're planning to stay where we are. There's a lot of uncertainty with tariffs at the moment with Europe. So they're not going to want to make any rash decisions on interest rates. So I think we're probably going to see not too much impact off of that this week. They may come out and change it. You never know. But if you look at history, with the euro, it's incredibly rare we get a deviation from forecasts. We had one in there, which is when everyone else did it. We had one in there as well. So it's very rare that we get any deviation. So we should get forecast. It's not the shock of the deviation that tends to make the moves with interest rates, although that will if we get them. It's the press conference. That's where the move starts. So you're looking sort of 45 minutes to an hour after the interest rate decision. That's when the moves tend to kick off, when we've got the information from the banks as to where they're going in the future. Because what we're doing is we're pricing in future movement in forex. We're not reacting to news. We're actually trying to get the next move started, basically. PMIs for the US come out 15 minutes after market open on Thursday. And then into Friday, we've got retail sales. So it's a really, really quiet week this week. It's all basically kind of back-ended on Thursday, but start of the week, nothing. End of the week, nothing. So with weeks like this, you quite often find we get a grindy movement. And this is where this midweek reversal term comes from. All the technical traders go, oh, it's a midweek reversal. It's nothing to do with midweek. It just happens to be when news is scheduled, basically. So we get the market moving into a move, and then news will move it in the opposite direction. So quite often you'll see the market drive in a direction which is opposite to what they're forecasting is going to happen. And that's where your midweek reversal comes in. There is no forecast really this week, though. These are all going to come out roughly where they were previously. So I don't think we're going to get massive moves this week, but we'll see what happens. So we go for all the FX pairs individually. ADRs this morning, you've just got those two. AWRs, there aren't any because it's Monday. RSIs are flat. Yeah, so there's nothing to look at all at the moment. It's a pretty dire start to the week. So no signals on anything at all at the moment. So we will have a look at all the pairs individually. I'm just going to start off seeing where we are with the indices. So 5-minute ORB and the 10-minute is an inside bar. 5-minute range closed too close to the high there, I think. I didn't watch it, but the 10-minute range is in, so I'll be taking a 10-minute ORB on the FTSE if we get one. No trade on the DAX today. That's going to be too small as well. Yeah, so no trades on the DAX today. Unless this DAX drives down back into this area, there won't be any trades on the 5, 10 or 15. We'll obviously wait for the 30-minute range to establish and maybe take a break of the 30-minute range. But yeah, it's all very initial move, fairly strong on the FTSE, but all very weak. If you look at these two in context at the moment, obviously from the weekly highs and lows, we're just kind of sitting in the middle at the minute. So markets really got stuck again, all of them. We're not trending at all at the minute. We are very, 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 very range bound. We're sitting in the middle of the ranges for the weekly levels at the minute. So inside bars is where we are at the minute. So we'll see where those go, but it doesn't look like there's going to be any trades on those straight away. Morning, Nav. Morning, Baggy. Rodrigo, pretty heavy week on earnings. That should be enough to move the market. Earnings got nothing to do with forex, but it will move obviously stocks. But earnings fortnight, stock indices on earnings fortnight don't do a lot. I've done this analysis recently. We used to move a lot on earnings in stock indices. That isn't the case anymore. So basically, like the Nasdaq, for example, now is Nvidia. Yeah, if Nvidia moves, this moves. Nvidia is now a $4 trillion company. It's the largest company on the planet now. It's surpassed Google and Meta combined. It's way bigger than Microsoft. It's way bigger than everybody. So with the stock indices, specifically the Nasdaq, we've got to this stage now where basically you're watching Nvidia trade because it is the Nasdaq. A lot of the other companies in the Nasdaq supply Nvidia. So if Nvidia is doing well, the other companies are doing well, which makes Nvidia do well, which basically drives this index. So earnings now, I don't see impacting this at all. The vast majority of the stocks that are in here are supplying each other anyway. But the top 10 within each of these indices drives most of the traffic in the indices. So if they haven't got earnings, if you've got earnings coming out and it's a company that, for example, is, number 27 in the S&P, doesn't move it. So it doesn't work anymore, earnings fortnight. I used to pay a lot of attention to earnings fortnight. Wrong one. Yeah. It's just not something that really I've been watching earnings fortnight. If you go back and watch the live streams for the last sort of 6-12 months, constantly I'm in here every time we've got earnings coming out and I'm saying, right, we got this, we got this, we got this, we got this, we got this. The markets don't move, especially the open. The opens are actually worse on earnings fortnight now than they used to be. It used to be the other way around. It used to go, when I was trading stocks, we used to sit around waiting for earnings fortnight because we're like, this is the opportunity. That doesn't happen anymore. These companies have got so big at the top that they don't actually move the indices. Individual stocks, yes, definitely. But look, there you go. Nvidia, of the S&P 500, there's 500 companies in here. Nvidia makes up 7.4% of the weight of the index, i.e. it controls 7% of the index's movement, 6% from Microsoft, 5% from Apple, Amazon. Look how small Meta is now, look, tiny. But if you put those together, you got like 10, 25. So 25% of the movement on that S&P 500 index out of those 500 stocks is made up from the top 5. They control 25% of all market movement. So something comes out and JP Morgan Chase has had a massive earnings hit. It's not going to even touch the sides. Yeah, if Nvidia's having a bad day, when they come out and have their best day ever, the stock market's coming down. It's not going to go up because JP Morgan's had a good day. It just doesn't work that way anymore, unfortunately. Used to, but for trading individual stocks, obviously, yeah, you want to be paying attention to these. These want to be on your watch list if you're trading individual stocks. But yeah, that's all this week. But as I say, I have found the worst weeks. I did a little analysis on this months ago, and all I did was look at the worst weeks for back testing for ORB on the S&P and the Nasdaq, because they're very aligned, basically. But and what I found was that it's the earnings fortnights that are the least liquid for the actual indices. Not so much least liquid, because we don't measure volume in CFDs, but they're the least movement. It's much more range bound during earnings fortnight. So, this is what we're looking at the moment with the DAX. Yeah, there's no movement here. This is what it's like at the open in New York. You might get a lot of volume come through, but you won't get a lot of direction, because there's maybe a lot of liquidity in the market, but all that does is mean that the market doesn't move. If you've got 100,000 people doing that and 100,000 people doing that, you're flatlined. Yeah. So you need NVIDIA to have an earnings beat, which will drive 200 million people that way, and no one wanting to do that. The price will have to slip to find sellers. That's when you're going to get the movement coming through. But yeah, it's different. This is the thing with trading. You find when you've been trading for such a long time, stuff changes. Stuff doesn't do the same thing as it used to. So you have to adapt. Like, that earnings fortnight is going to be usually quite quiet, especially in a Trump presidency, because what you get in a Trump presidency is him moving the market. It's got nothing to do with business, is it? If he decides he wants to drop the Nasdaq, he will restrict semiconductor movement between China and the US. Bang, you're stuffed. Goodbye, Nasdaq. That's it. And it's not anything to do with the companies. It's to do with the policies. It's the way it works when Trump's in charge, unfortunately, which is good for us because it creates volatility, but you can't time it, which is a bad bit. Right. So there's nothing happening on these today. We're inside bars on the FTSE. So either the FTSE will go somewhere or it won't go somewhere. Obviously, orders are in place, ready to go. There is no trades on the DAX. So if the DAX sits inside bar for the next 15 minutes, there will be no trades at all on the DAX. So I'm waiting for the 30-minute range to get put in. If the 30-minute range is the same as the 15, we're not going anywhere. So there won't be anything this morning. Right, let's have a look through the FX pairs. We've got nothing to look at from a signal perspective. There's no RSI extensions on the hourly or the 4-hourly charts. ADRs, we haven't really got anything to look at. We looked at these AMRs, the monthly range extensions on Friday last week. The main thing is the Aussie New Zealand, which is what we're on at the moment. So it's done its monthly range. Let's go back there. So it's done 175% of its monthly range. And obviously it's starting its pullback now. So really big range extension on that one. I'm already short on it. I got short here when we got the RSI extension on the, I think it was an hourly 80. Can't remember why I got into this one. No, I can't remember why I got into that one. But anyway, it's range high. So range bound, basically. Oh, yeah, I remember why I got into it. It's basically the day before the Australians, the Aussie were going to freeze their interest rates or change their interest rates. And they decided not to. So I got in on anticipation of them not changing interest rates because it's very, very rare that they do it. And obviously, what did they do? The opposite. So got in right at the front end of that squeeze. So that's playing out nicely. I had an exit on that this morning while I was asleep. It pulled back nicely. So the worrying thing for me is now that we're just going to do a 50% retracement on this current leg. But we've got lots of downside targets in here, so I'll wait and see what happens today. But hopefully we'll continue that move back down to the downside. So yeah, Aussie New Zealand was nicely extended on the monthly. And obviously that's pulling back at the moment. So this area here, we kind of broke through that on Friday. Obviously today we've had news, so it's kind of gapped up or gapped down and sprung back up again. But I don't think necessarily. I think it's probably going to return to the origin of that move, and then we'll either continue that pullback or we'll kind of probably go into a range, I think, up here. But we will see what happens. So Aussie, New Zealand, obviously we've stalled out over the last week on that push that we had, which is good because I've got my shorts on. So looking to get back down into there. Aussie dollar, US dollar, just sideways at the moment. As you can see, it's really difficult to get into anything at the moment. When it's all range bound like this, there's nothing getting extended anywhere. That's the last entry long that we had, Aussie US down there. It's just sat sideways at the minute. So this dollar is all over the place at the moment, obviously with Trump pushing it and pulling it. It's very difficult to call which way anything's going to go at the moment. So really, we've got the market structure break back down to the upside. We're coming out of propulsion here. That's a good target intraday to the upside. That's where I'll be looking to short it. So market structure, we got a double top. We broke down low, double top, lower low. We're looking for the lower high to go in. This is where ideally you would look for a lower high to start pushing back down into this area down here. So we'll see. But yeah, bearish at the minute. This reversal retest holding, but no signals. Swiss yen got out of that last week. This is just stuck sideways now. So we've got a gap down on all the Swiss pairs. Not quite sure why, but we did. We're sitting around at the moment, obviously after this pullback, just sort of deciding where to go next. So the Swiss and the yen, both safe havens. We've got into a really big squeeze on this. If you look at the move that we're in at the moment, it's kind of equivalent to the old yen carry trade legs. So I would be looking for it to pull back into the 24.72 area at some point. And this big down day we had here is potentially going to be the start of a reversal alert. If you look at it on the 4 hour, there's your reversal alert. And this is potentially the retest leg. So there's your break-in structure to the downside. There's your lower high. So we're looking for this low of the week to get broken to start that M pattern reversal back down to the downside. So we'll see where we go on it today. Obviously with the Swiss and the yen, very hard to call what's going on with safe haven at the moment. The yen obviously now using interest rates. So it's difficult to know whether we're actually getting money pumped in here when we get trouble. It doesn't seem to me to be the case at the moment. So I think the Swiss is really the main safe haven currency at the moment. So I'm steering clear of all yen pairs for the time being. I can't read this yen. I don't know what it's doing. Since the intervention, I'm going to go through all the yen pairs at once. Since the intervention, you can see the market's kind of been a bit shell-shocked. We're still continuing to the downside, although it's on a bit of a pullback at the moment. But the carry trade, the old carry trade where you just sell yen, basically because of the swap costs, you just make money on interest basically against the yen. I think that's over now, but I don't know how to treat this instrument anymore. It's still too expensive to trade in a short direction, which is what you want to do. But it's difficult to call which way you're going to go on it, really, isn't it? So all the yen pairs at the moment, I'm just going to kind of give them a little bit of a wide berth. Euro yen's come back up to the intervention point, which it seems to be reacting at. Again, you've got an M pattern reversal going in there. Lagarde, obviously, with the interest rates, could well change the direction of that this week. Pound yen, again, back up at the highs. This is a really good resistance level here, potentially. So it's this previous high here. So this could be a nice, if we're going to stay range bound because we're non-directional on the yen, potentially this is where you want to be looking for your shorts. And same with the New Zealand dollar yen, obviously sideways. It's just not got any traction. So since the intervention, that massive move, we have just become shell-shocked. So you should be able to really trade this in either direction. It's kind of turned into another euro pound in that it's just stuck. It seems stuck. So as you can see from the US dollar yen as well, if you go back and look at the intervention on the US dollar yen here, This was the main reason the intervention happened, obviously, because they couldn't trade with the dollar. So we did pull back to the intervention level and then scream straight back down again. But obviously a lot of this is to do with Trump as well. So at the moment, we're just kind of sitting around. So again, really nice resistance, monthly resistance we're at the moment. We're stuck up there. You've got another propulsion gap move here, which they sold into twice. So, 225, 250 ADR from where we are today. If that doesn't work out, that would probably work out. So, but yeah, yens are just giving them a wide berth at the minute. I can't short them because they just cost too much money. That last yen trade that I had, which I got out of, I haven't got the swap costs there. Here you go, you can see. So I got out of that Swiss yen last week. Look at the swap costs. Yeah. So I made 650 last week only because I lost 774 in swaps. It's just too expensive to hold and trade at the moment. From a short perspective, longs, fine. But I don't really want a long against the yen at the moment because I just don't know. I can't find any signals really to get in on it. So I'm just going to give it a wide berth. If I see something to the downside that looks good for longs, potentially I will take it, but it would need to be on one of the others. So something like the Aussie yen. I mean, there's no real reason to be long in that at the minute. Euro yen, no real reason to be long in that at the minute. Pound yen, dead. New Zealand yen, possibly. So that sort of movement, something down here that really catches my eye, or a nice level of support we get to with an RSI extension, something like that. But other than that, there's plenty of other things to trade. Let's have a quick look at the indices. So no trade FTSE still. Just sitting around. DAX, we've now got a range on that we can take on the 30. So 5, 6. Yeah. So I will be taking a 30-minute range break in 1 minute. 1, 2, 3, 4, 5, 6. So this is your 6-bar range, 30 minutes. So I'll be taking a break of that range. If it breaks, obviously. I'm not holding out masses of hope today. But yeah, that's where your 6-bar range is going to go in. How many trades it took for you to get out of Swiss yen? Lots. Yeah, so I covered this on Friday. This with the Swiss yen, because there's no upside, we're at all-time highs. So I have no resistance. Yeah, that's your kind of all-time high on this. Going back, we're back now into the pre-2000s. We're out in no man's land. We haven't been up here, so it's impossible to pick a aggressive drawdown control area here. So you can see this. I'm just got in aggressive, super aggressive because of this extension. Yeah, it's got to come back from that extension at some point. So when I get into these sort of situations, normally these would be single trades. So it looks a bit deceptive because I've got so many trades on. It's not that I took so many trades. What I would normally do when the EA is running on my VPS, which I still haven't managed to get plugged in yet, is that would be one trade with high risk, so a high lot size. What these are lots of small trades because it was just me basically spamming the sell and the sell stop button and building a position up to the right size. So although there's like 1, 2, 3, 4, 5, 6, 7 trades there, that's just one aggressive drawdown control position. It just happens to be made up of 7 trades. And I had another one there. So basically it's just these extensions, divergence. It's just looked ready to go. So I was just getting ADR, getting average within ADR so that I could exit the position. It's an escape route. That's what aggressive drawdown control is. It's an escape route. When the market gets so extended like this, that wait, pen. You are so extended. That second extension above the 80, where you didn't get a pullback on it, not big enough pullback. That is where I was expecting it to come back from, which is why I got in there. And then we had these other two that I took, which were all divergent. So just aggressive. The danger of this, obviously, is if this had have continued going much, much higher, it would have been a fairly hefty loss. Yeah. So, but it didn't. And it doesn't usually, it's very rare that you'll get into a squeeze, which has been going on for like 4 to 6 weeks. Normally in that time, you will hit a resistance. You'll either hit a previous monthly level, you'll hit a previous large propulsion move caused by interest rate change or something like that. And the market will just get resold or rebought, whichever way you're going. The difference between this one and a normal instrument is all-time highs. You just don't have anything to go on. So you have to go on strength of movement and hope, and it is very much a hope, that it pulls back from there. And that's why I got out. Yeah. Normally in this sort of situation, what I would do is drawdown control. So I would use the aggressive drawdown control position to bank profit, and then I would close partials in the understanding that what we would normally do is pull back on it. In this case, because we're at an all-time highs on an instrument that has broken to all-time highs now having changed interest rates or moved to an interest rate mechanism rather than a negative interest rate mechanism, just basically just got out. That's it. Done. I made 2% on it, which is not a very good payoff for a 6 to 8 week hold, but it's not a loss. And that's what it's all about. It's not making a loss. So, yeah, it was part luck, part experience, part skill, part reading, part everything. This is what trading is. There's no one on the planet that can tell you when something's going to move, where it's going to go, or any of that information. You just have to go on what's happened in the past. And in the past, when you get extended above all-time highs, the market usually will stall. Not because of any other reason than you're in an area where we are uncharted waters. What do you do? No one knows because you haven't been here before. So it tends to stall. But I think with something this big and strong, we're definitely going to pull back on it. If you look at the daily propulsion gaps to the downside and where we're looking to go, you've got this big one here, you've got a big one here. So we should at least get another 125 ATR out of this to the downside. But more likely, I think, we'll wait for the 24 to catch up with price in an accumulation like this. So it'd kind of be like a little bit of a flag break. Or it will just pull back. Yeah, they will pull back into the 24.72 zone. And what we do from there, we don't know because we haven't been here before. But this is the key at the moment. And this is the reason I got out and I wanted to be out of it. This is a safe haven. If Trump suddenly whacks massive tariffs on everything, or if Israel suddenly bombs Iran or whatever, this is going to go like that. This is the main safe haven currency at the moment. So any kind of thing that goes wrong anywhere, either financially, world politics, war, massive natural disaster, the Swiss franc will get pumped to crap. The last thing you want to be doing is short, overexposed in large drawdown with the possibility of that happening. And it's happening a lot, isn't it? Yeah. We've got a lot of uncertainty in the world at the moment. So it's just an escape. Get out and run, basically. EuroCAD. Let me just catch up on the chat. Morning elevated. Stuck. Paul stuck in the euro pound for a while. We'll get to that one in a minute. I got buys on that at the moment. We'd only needed 0.75 ADR to get out. Yeah, it doesn't move though. This is the trouble with pound, euro pound. It's range bound pair. So, Samir, what's that green thingy? I don't know. Are you talking about in my office or are you talking about green thingy? Where was I looking when we were talking about a green thingy? Oh, this it's moving average shadow. All this is doing is it plots a color between price and a moving average. So this is called the MA shadow, basically. So it just paints in basically directional bias. So if we are below the 72 moving average, it'll be red. If we're above the 72, it'll be green. So it's a good indicator where you can just basically come onto a chart and go, is it bullish or bearish? It's bearish. Why? Because it's red. What does that mean? We're below a moving average. You can change it to whatever you want. So if you wanted to use a 20 moving average, you want to know if we're below the 20 moving average or above it. You can see the moving average is there and you can see we're below it. But this just is open up a chart, bull bear. It's an instant reading of bullishness or bearishness in the past, which has obviously got nothing to do with the future. It doesn't help you in any way, shape, or form. Because this is red doesn't mean you should be shorting it. Yeah, you should have longed it there, 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 and you should be longing it today. So 50% of the days when this is bearish, you should have been longing it. This is why I don't pay any attention to moving averages, because they're just telling you what's happened X number of candles in the past. I couldn't give a monkeys. I'm interested in where it's going now, not where it's been. Doesn't help me at all. At all. Anybody that ever teaches you moving average strategy, if you're new, run away. Moving average crossovers, golden crossovers, bounces, MA bounces, all this sort of rubbish. Ignore it. It's got nothing to do with anything. It does not help you. We're below the 200 moving average, so I'm only going short. Well, that's 50% of the days you've lost on then, isn't it? Useless. Looks good. Yeah. Look at this beautiful. Yes, let's pull back into the 2472s, pull back into the 2472, do that. Yeah, brilliant. But what you're doing is you are taking 3 trades and missing all the other opportunities. So yes, it does work, but it didn't work there, did it? Every indicator has a 50% strike rate. Sometimes it will, sometimes it won't, because the market is binary. It goes up, goes down. That's what it does. So if you are using a indicator to give you a directional bias, you are trying to attach a directional bias of 50-50 to something that has a 50-50 outcome anyway. You might as well flip a coin. It's got the same outcome. So, but they're really useful for new traders to understand what trends are. But, trends come to an end, which is why you shouldn't be a trend trader. If you're a trend trader, what you will find is, if you are a trend trader and you're in here, you're in the wrong place. But if you're trying to be a trend trader, what you will find is by the time you've identified a trend and you've gone, we're trending, you've missed it. It started here. Yeah. So you saw price push up, you saw price pull back, you saw price make a new high. You've gone, hey, we're in a trend. Yeah, I know we are. You've missed it. So you go, okay, I'll wait for it to get in long there. Oh, why did it come down? It's trending. No, it's what was trending. You missed the trend. You needed to be on the trend here. So you need to be a breakout trader. Because breakouts turn into trends. So you either become a mean reversion trader, you identify a trend, and you mean revert the profit-taking moves in the trend, or you're a breakout trader and you get into those trends right at the start. If you try and get on halfway through, good luck. On paper, textbook, when they show you the trend trades, like this one here, what a beautiful trend. Yeah. The opportunities to get in short on this were there, 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 and there. How many of those worked? 2 out of 5. You wouldn't have got on that one because it's part of this bull move. So you'd have been buying it there. You wouldn't be selling it. So you couldn't get on that one. You had to wait for it to confirm and then take the next one. So that one you could have taken, that one you could have taken. You would have taken that one and lost because you expected the trend to continue. So you can make up a rule saying, oh, no, I'd never take the 5th pullback in the trend. Okay, wouldn't take the first one in the trend because that could be it. So you basically got 2 opportunities. That's fine. Good luck waiting for those to come along because you'll be sitting here all year waiting for that opportunity. You might take 3 or 4 trades a year. It does not work. Trend trading is a myth. Banks don't trade trends. They make trends. Morning, electrician. Have you tried running another account that attempts to hedge your positions to limit drawdown? No. Because I would just be trading against myself. If you try and hedge something, it's great short term. So if I go long on something and I go long on something and I go long on something and it doesn't work out, and then I start going short on it, When it does this and then finally does that, I can get out of these longs. What I've now got left with is a load of shorts in the wrong direction, because I'll have 5 of those on and I won't be able to get out of those. Overcomplication hedging. I've got a video in the members group about it on YouTube. I have back-tested every hedging strategy out there. I have watched hours and hours of YouTube videos about people who are experts in hedging, and I've built models for all of their strategies. There isn't one that works. Hedging single instrument doesn't work. Hedging multiple instruments, yes, as long as the fundamentals line up. But that's called position trading, portfolio trading. That's what the banks and institutions do. They manage their hedges across multiple instruments. Just diversification at the end of the day, isn't it, really? So yeah, you can do. I mean, just be aware that you're going to be left, all we're doing when we're position trading is we are looking for an extension and we are trying to profit from the pullback. So if you go, oh, right, okay, I'll go short because it's not working out. So I've been long in it. Or I'll just go short then. Yeah, that's when it's going to go long. And you're going to go, oh, brilliant, I'll get out of those. Now you're going to be stuck in all these shorts. So when do you start hedging the shorts? You will be constantly in a problem. Yeah. If you are constantly in a problem, you have to manage that problem constantly. It is incredibly hard work and the reward is not there. What you will find a lot of the time is you will get stuck in a hedge. Short term, it works. And then all of a sudden, the market will go parabolic. You will get stuck in a hedge and the size of the hedge will expand and expand and expand and expand to the point where you can't get either of them back to the average price. And you end up sitting in it for months, stuck using drawdown to eat your liquidity that you cannot trade with. It just becomes a pain in the backside. How about SIH hedging? Is that category of problems? No, because SIH is an intraday strategy. We're in, we're out, we're closed. It's a scalping strategy. Hedging positions over multiple days and weeks will just get you into trouble. Watch the video. If you're a member, if you're not a member, you can't watch it. But if you want to become a member, go and watch it. Scroll down because it's down here somewhere. Creating a testing a hedging strategy and looking at the pros and the cons. So this video here, it's only an hour and a half, but that goes through it. I have tested them all. There's if you put hedging into YouTube, it doesn't matter if it's forex or what. There's a number of I haven't seen him for a while. It's this guy, forex hedging, yeah, for example, tested all those strategies, they don't work. Yeah, they all look good on paper. They all work well on paper. They all work for a short period of time. I can also get a win rate of 82% with 117 trades. Yeah, but what he won't show you is the ones that don't work out, that go into squeezes that he gets stuck in for 6 months, hemorrhaging swaps over and over and over again, getting more and more and more into drawdown, the hedge getting further and further and further apart. And then he says, we'll work the hedge from the outside. Then we'll say, we'll work the hedge from the inside. And then you need a maths degree to figure out what the hell you've got to do. I've built EAs with AI to backtest all of this. None of them come out profitable. I've done system parameter permutation tests of thousands of variations of the strategies. They don't work. And it's not just this guy, it's all of them. Yeah. I mean, this is the trouble, isn't it? Yeah. Go down this route. You won't come back for 6 months, and then you will come back and go, you're right. I've done it all. I've just done it all. It doesn't work. I haven't done it all from a practical perspective. I've done it all from a backtesting perspective. For me, that's good enough. If I can't get it working in backtesting, I can't get it working in live, because backtesting is the old live. So But short-term intraday hedging, fine. Because what you're doing with an intraday hedge, when using stock index hedge, for example, what you're doing there is you are locking in loss with an escape plan. And if the escape plan hasn't played out by the time the market closes, you are out. You are done. Yeah. So it's a short-term strategy. Yeah, with SIH. So try to find a bit. Yeah. So what we're doing with SIH is you break long, you break short, you're hedged. So what we do is we wait for the market to go somewhere. Yeah. And if the market doesn't go anywhere today, you lock in the hedge as a loss. That's it. You take one trade per day. That's it. It's closed by the end of the day. And it is either a locked in loss, i.e. you got it wrong, or it got it wrong, or the market wasn't right, more likely, for the strategy for the day. Or you get into a hedge. The hedge gets to an area where you can take profit, which is an extension of ADR. We wait for the pullback after the extension, and then we exit the other side of the hedge with less loss than we made on the profitable move. So that becomes $1,000 profit. We are now in $1,200 of loss on the opposite side of the trade. It pulls back to generate an $800 loss on that short. We close that out there and we make a positive $400, for example, just making simple round numbers. But at the end of the day, we shut it. Done. That's it. You're out. Reset next day. And this is how to do intraday single instrument hedging strategies. The problem with all the other strategies in hedging that everybody else is raving about on the internet, not raving about, but going on about and working on the internet, our long-term hold, medium-term hold, is let's hold on to it and work our way out of it eventually. It doesn't work that way because the hedges just get so expanded, you can't get back and get out. And you need these complicated algorithms and things, and I've built them all. And yes, they do eventually get out of them most of the time, but they take so much money in swaps. One thing you won't find anybody talking about in those videos is swap costs. Yeah, cost of doing business. Look at this last trade that I had. Yeah, that's a $1,500 profit trade. No, it's not. It's a $650 profit trade. Yeah, didn't take that into account. That, if you're holding a hedge long term, is going to kill your account. When you backtest, you've got to take that into account. They don't take any of that into account. It's pure theory. It doesn't work. Anyway, Euro Swiss. Did you say you were triggered long on FTSE? I am. I didn't say, but I am. Long FTSE, short DAX. So partial target for the DAX will be Friday low. And FTSE, obviously, I would imagine I'll stop out on the FTSE because if the DAX is going to come down, the FTSE will get dragged as well. So that will stop out and the other one will go. This is basically a hedge if you think about it, isn't it? Yeah. So I am hedged. Okay. These instruments tend to move roughly in the right direction, in the same direction every day. Yeah. So if this goes flying, this tends to go flying and vice versa. But they are very, very different in the way that they get from A to B. If I've gone short on the DAX and I've gone long on the FTSE, because of sector purchases between these companies within these indices and other companies in the NASDAQ, the S&P, etc. If you're doing a sector purchase in engineering, for example, the engineering stocks here are going to go up, the engineering stocks here are going to go up, which means that these indices will go in roughly the same direction. So if I'm short here and long here, I'm hedged because likelihood is if this collapses to here, this will not be able to break out long, which means I'll stop out. But the risk here is X, the reward here is Y, and Y is greater than X. That's the edge. It doesn't matter. What I don't want to happen today is for this to do this. Because then that's a loss and that's a loss. You can't make money in a breakout strategy when the market is in a range. Physically impossible. So every strategy you have is reliant on the market condition being correct for the strategy. So this is a brilliant strategy. It works really, really well when the market isn't range bound. If this sits range bound for 6 weeks, I'm stuffed. But then it will go into a trend for 6 weeks and it will make back more money than it lost in the range. And that's the edge. With hedging, it's kind of just flipping a coin all the time. It just didn't work. I get why people like it. And I went down the route of it a lot when I was learning. And it looks really, really good on paper. But in reality, it doesn't generate enough money, unfortunately. What's going on? Morning, Leshy. Not a lot. As you can see, the market's pretty flat. Right. Euro Swiss. Sideways on Euro Swiss at the minute. We haven't had a reason to trade this. That was my last shorts, as you can see. But we haven't had a reason to trade this for a while. So had those shorts on. There was a very weak signal to go long here. But obviously, with interest rates staying stable here, with the Eurozone and potential Swiss franc strength, which we've had on the back of safe haven runs because of tariffs and all sorts of other things in conflict, it's just stuck. So not really any reason to be trading this at the moment. It's a long from obviously the lows at the moment, but I mean, its ADR is 30. It's just not on the radar at the moment. It's not doing anything. Euro pound, I've got some buys on at the moment, but this is for a different strategy. It's a stop loss based strategy. So I've got some longs on it at the minute. But again, euro pound ADR is 42. As you can see at the moment, euro is winning because the pound is weak. So I don't think there's any reason why this should stay bullish against the pound, because there's no reason for the euro to be massively bullish at the moment. It's probably more bullish than the pound is, but it's quite a big, strong move, considering they're both static interest rates, inflation getting a bit sticky, and just everything else that's going on in the world at the moment. But there's no real bias, long or short, on it. So you should be able to trade this in either direction. If you're short in it, we've had the reversal alert, which kicked in on Wednesday, Thursday last week. We had this massive, strong bull move where we didn't get any bear movement at all on the 4-hour chart. We put that new high in. So as you can see, market structure is just kind of flip-flopping along. We're coming up into resistance up here. So there is a little bit more upside room. Sort of about 1.7, a couple of ADR basically to the upside. Then you're going to start hitting that upside resistance. So we are going to start to pull back from that. We may well just pull back where we are now. So this could be the exhaustion point. You can see the highs. Yeah, when we're breaking out to new highs, they're getting smaller. Yeah, so we are starting to roll over now. So I think with the reverse alert we've had here, the reverse alert was actually there, the first one. Then we put this big spike in, which gave us a new reversal alert, which happened here. But the first one happened here when we broke that low. So that is your left shoulder, right shoulder. So we're already started market structure back down to the downside. So this could go either way from here, but it looks like it's more bearish than bullish at the moment. I think we'll probably come back down and retest this propulsion gap at some point. In fact, I might just close that. This is a sentiment trade from last week. Might just close it out. So yeah, euro pound basically just starting to roll over. You need to just be aware, obviously, where we are. There is a temptation to come and retest those highs, but we are potentially going to start to pull back from here. This move here is artificial. This is Trump creating the need for the Europeans to do a bond sale. So this was kind of a fire sale, basically, when Trump turned around and said, we're not helping you anymore, NATO and Europe, with Ukraine. You're going to have to fund it and fight it yourself. So the Europeans had to do a bond purchase to basically get a large injection of cash. That was not real. So this is why we got the A-shaped recovery on it. So we have got a very fast move against the pound going on with the euro at the moment. So this will pull back down. You know, just watch where the propulsion gaps are. This tells you where price is going. Yeah, price goes back to where it came from. So just watch for the propulsion gaps. If you're short on this, you know, you've got 4-hour one there. The next one is down there at the monthly highs. Go back down onto your hourly. They're more reliable. You know, small ones here, definitely get 125 ADR out of it at some point, but equally, I think this has probably got a lot more on it. So fibs and propulsion gaps are your bread and butter. Yeah, market structure is literally low, high, higher, low, higher, high, low, lower, high, lower, low. That's market structure. Market structure is made up of pushes and pulls. Pulls are smaller than pushes, and they are either 38, 50, or 61.8 retracements on the initial leg. That's it. That's all the market does, all it's ever done in the past, all it will ever do in the future. Find the fib levels, find propulsion gaps, match them up. Those are high probability areas price is going to move to. You will never be able to time when, and you will never be able to time with 100% accuracy which. But if you are short and your average price is there, it's likely going to hit that. So you want to try and get your average above the closest propulsion gap. That's what I'm always striving to do when I'm in a trade. Always look for where your exit is going to be. So when I was short here, yeah, my target was this propulsion gap. Yeah. Yeah. So that was the closest propulsion gap for me. We bounced out of it. So I got out. Yeah. So you know price is coming back to these levels. This is where the buyers are. Yeah. So when we get back there, they will either exit their positions or they will buy more. That's it. So you know you're coming back to these levels. This is an A-shaped recovery in this case. But where are we going now? To the upside. Well, if you're buying it now, you know you're going to hit that. Easy. Bit more difficult, a lot less likely. Tricky. So TP1, TP2, TP3. If you get a V-shaped recovery on it, like you got an A-shaped recovery there, that will be your ultimate target to the upside. But it's only going to get to there if there's a fundamental reason why the pound is stronger than the dollar. If we start that and we get here and then Trump says, hey, everybody, we're going to do this, which is going to boost the US economy, and the pound turns around and says, sorry, guys, we're going to have to drop our interest rates really fast, it's never getting there because fundamentals drive the market, not blue lines on a chart. Yeah. So always look for the levels. So if you're short on this at the moment, I always use the hourly because the hourly is the easiest way to see the large orders going in. These are big bank orders. When they break a high, they are reliable. They add more. Yeah. When you break a high, you add more. That one broke that high. That propulsion gap came back down to this propulsion gap, pushed up again. Yeah. So, just use them as targets. So if you're short on whoever it was, euro, pound, look for where we're going to the downside. Yeah. So if this is going to be the start of the leg down, yeah, that's a decent area to target. That's 50% retracement on that leg. Stick a fib on it. Easiest way. Stick a fib on it. So you got that leg there. Although, I mean, it's difficult that, if we're looking at the actual whole move here, that's a 23 retracement. There's your 38. There's your 50. So that's a 50% retracement on that leg, which was, similar to this. Nothing's exact. It's all rough. Everything's always rough. Pound US dollar. So at the moment, I've got nothing on this. I was toying with the idea of taking a long down here at that monthly low. And we did bounce, and we are bouncing, but we've stalled out. So We've been here for 3 days now, and it does look like this was a news event, obviously. We pulled back, pushed back up again. We haven't broken the high of that news event yet, and we are just kind of flip-flopping around. So this, I was looking at getting in long on this, but the current exposure for me, I've got shorts on the pound. So taking a pound US dollar long is going to kind of hedge me. So it is a very good little long opportunity, I think, out of that. This sort of worries me that we're just going to continue to break down here on US dollar strength. There's no strength in the pound at the moment. There's no reason to be buying the pound. There's no real reason to be buying the US dollar, but that changes on a daily basis at the minute. So I kind of like it long, but I also don't like it at the moment. So it's kind of where it was last week. It was a good opportunity. That was on the Wednesday when I lost my internet. So I couldn't really do a lot of deep analysis or anything last week. It just happened to be when that was already hitting. So I think what I'm going to do is just leave it for the minute. I don't really know which way to take it. The signal's gone. If you look at it on the 4 hour, last week, early sort of midweek, was exactly when you wanted it. It was below the 20 level. You have had an opportunity to get out because we've had, from where we were there when we got that news spike, we've had roughly an ADR. It's 85. We got 83 roughly out of it, something like that. So, but it's kind of stalled, and it worries me that we're just going to flag break down and come back down and test this area here. It's not a problem because you would just scale in to sort of 4 to 5 positions by the time you were down there. But that's all you're going to pull back on, that little leg there. So it's not the greatest trade in the world at the moment. So kind of leaving it alone. Oil, I'm still long. And this is just grinding away. I'm just hoping that we get a move up to get out of this. I just want to test that high so I can escape, really. Be out, be done. The trade's dead. It was a conflict trade, and the conflict got turned off, doesn't it? Yeah. Show of military force by air, war over, basically. So, yeah, Iran didn't stand a chance, did they? So this undid very, very, very quick. Flat at the moment. There was a buy last week. I scaled into some more here. Again, ignore the number of trades here. This is kind of because I'm not using the EA in auto mode at the moment on my VPS. I'm just manually scaling in to the trades at different sizes. So, yeah, looking for that one to push back up into propulsion. Aussie dollar CAD, I'll whiz through the others. Totally sideways, nothing to do with it at the moment. You've had a reverse alert short, so quite possibly with that weekly and this double monthly here. Downside, got 2 propulsion gap targets to the downside. Upside, you've got a propulsion gap target up at the monthly high. Right now, you don't want to be doing anything. You're bang in the middle of the range. So you want to short that or buy this. Yeah, that or that. Just nothing to do with it at the moment. Aussie Swiss, sideways as well. So been sideways on this for 3 weeks now. Swiss franc again, strength in the Swiss franc, but obviously the Australian dollar we had strength in as well because of the interest rates. They didn't change. So yeah, we're just kind of stuck sideways on this one at the moment. It's more likely, I think, that we're going to push up on the Australian dollar as long as things keep calm and we don't get any runs into safe haven territory. If we do, obviously, you're going to find yourself back down here or probably much further down. But yeah, right now, I'd much rather be buying it than selling it. And there was a signal on it last week. We got a reverse alert on lower timeframes last week in there. Oh, actually, it's only just happened on Friday, isn't it? Because of the strength of that move. But yeah, so again, straight into that propulsion gap. Rebought. Yeah, so you got upside target here, which is what's slightly worrying. But I mean, it was a long, it's kind of been missed. So sideways. Yens I've covered. CAD Swiss, again, this is a sell order. This is part of a different strategy that I'm testing at the moment with some guys. I decided to do it on the position trading account because it's a stop loss based strategy. But it's unusual for me to go live testing on this, by the way, just in case you're wondering. Normally, I would demo test something and back test it, but it's a strategy that I used to trade. So I know it already. And I'm using new data and AI analysis to execute these. So, and I've got a much more data on this strategy now. So It's basically a counter sentiment trade strategy. So what this is kind of a hybrid position trading strategy. But the idea is we get in and we add once to losers and then get out. If it goes our way, we add once to buyers and get out. So it either works or it doesn't with sentiment driving price. So there's a massive military helicopter flying over. So it's a different strategy. But from a mean reversion perspective, I should run this on a different account, shouldn't I? Because it's going to confuse everybody. I will cover this in the members stream. So it's sideways, has been for 3 weeks at the moment. There's more upside, I think, on it than downside, from my perspective anyway. But it could well sort of sit in this range for a while. But I think the next direction of travel on this is going to be long. Again, this Swiss franc, with everything Trump's been doing, has been very, very powerful. The Canadian's been struggling because of the Trump tariffs. So at the moment, we're kind of in a reset perspective and we're waiting for the next range of tariffs and things to happen. So we're sideways, we're waiting for news, basically. Euro odd, sideways again. A lot of it is, this is the thing, this is why I haven't had too many opportunities. We're not really getting anywhere. We had shorts here, you had a short last week, you had a long out of that. But we are really stuck on a lot of these euro trades at the moment because the interest rates are static. So this is getting pushed around by the Australian dollar at the moment. Obviously, strong Australian dollar because of interest rates. So I think that's probably going to continue. However, Lagarde on Thursday could completely flip it and say, do you know what? We're putting interest rates back up next month. You're off. Yeah, she's more likely to say we won't do anything. The preferred next direction is that, but you never know. This is why we pay attention to news, because it's what makes it go up and down. So we are stuck, as you can see. So we are grinding, but I think the grind is kind of over now. The Australian dollar has done what it's done with interest rates. So pullbacks on this today, exactly where we are at right now. So we're in this propulsion gap, which is a pullback potentially. Come back down. However, the contrarian move is obviously this. Either going up to there, or you're going to come back down and retest those lows. One of those two things is going to happen. Euro New Zealand, sideways. Not really doing anything at the minute. So again, all the euro pushing up at the minute because obviously the bond purchase thing and slight strength, but it's really more neutral. This is getting pushed around because of the weak New Zealand dollar. That has, if you look at the news this morning, just got worse. So this New Zealand dollar should be weakening again. Therefore, obviously, direction of travel, continuation in market structure. No reason why we shouldn't be continuing to come back up and probably retest those highs at some point. But right now, it's kind of a buy, but there's no buy signal. So if you drop down, if you do get any deep pullbacks, probably good opportunities to purchase. Euro US dollar, as you can see, we've got that strength coming through in the dollar now. We're coming back down to retest this propulsion. Might come back up to there temporarily. But again, we're waiting to see what happens with the news. And there is no news until Thursday. So until Thursday, don't expect really to get much more outside of ADR. Probably flip-flop around unless something else obviously happens. Keep your eyes peeled on financial juice, just in case Mr. Trump decides to move the market. We'll do the pounds. Let me just have a quick look at the indices. Not going anywhere today. So DAX back inside range. FTSE breaking out. So again, see what I mean about confluence? Yeah, pushing up. Yeah, if we're going to break long today, I'm going to stop out on the DAX and the FTSE is going to make the money. If we're going to break short today, and this is a pullback short, I'll make money on the DAX and I'll stop out on the FTSE. Yeah, it's unusual for them to take off in completely opposite directions. But you can see the way that this one's getting there, high, higher low, higher high, higher low, looking for a higher high. With this one, we got a high, low, lower high in at the moment. So bearish and bullish. But short-term movement is usually in the same direction. So whoever's the strongest, basically, is usually the winner. Morning, Pot DJ. But yeah, can't do anything with it at the moment. Not moving. Pound odd is totally dead sideways. Buys out of the lows from that was actually the week before. No, it wasn't. It was early last week was buy. But yeah, so looks good at the moment for longs. We are just kind of grinding away. So pushing up into propulsion up there. You've got nice targets to the upside there. Watch for an additional bounce down there. Pound CAD, again, longs. There's no directional bias on any of this at the moment. There is no directional bias on anything at the moment. There's nothing that you should be saying, I definitely want to be buying this or selling that. Everything is very neutral with interest rate decisions. CPI is not going in the right direction on anything. There's nothing really that you could turn around and go, wow, isn't the X strong or weak? So everything is really just pumping when news changes directional bias. But as you can see, like news, what do we do now? News. It's just waiting for something to happen, basically. So at the minute, this is a really good looking long as well. I'd much rather buy it here. If we could get a 150 ADR or RSI extension to the downside this week on this, that would be where I'd like to buy it. We need either some strength in the CAD, which would be nice because that would help oil, or something to go wrong with the pound. But, we haven't really gone anywhere in the last week. Upside targets, there's way more of them than downside targets. So, this is another advantage. If I can get down to here and create another propulsion gap along the way, you've got so many reasons to go long and not really any reason to go short. So it's just trying to find those entries basically at the minute. There was one last week on it. Same with all the other pounds. The pound was weak. It did pull back nicely. I've got a short on this pound Swiss. Again, this was a sentiment trade. I'm just going to protect that. I got 2 on that. We'll add some more. Add some more to that if it drops today. But yeah, overall pound Swiss, yeah, many reasons to go long on this, but it's the Swiss franc, and all the time we've got all this uncertainty and these issues with tariffs ongoing, especially with the Eurozone, which is the main trade partner for the Swiss. I don't see any reason why the Swiss shouldn't continue to remain strong, but it's been so strong for so long, it needs a pullback. So it's a very difficult thing to trade the Swiss at the minute. Always is. This is why so many people don't trade it, because it's a safe haven currency. You can read it from a technical perspective as much as you like, but if a war kicks off, that's going that way. Yeah, it doesn't matter what your lines say, what your indicators say, whether there's a whacking great quadruple bottom. Yeah, market will buy the Swiss franc in times of trouble. It doesn't look at a chart and go, oh, we can't use the pound Swiss because there's a big support there. It just goes through. So at the minute, the pound is not strong, and the Swiss franc is. So it is starting to pull back, but we have just pulled back into propulsion and seem to added more size in. So I don't know. It's a very difficult one. It's one of those things. It's short term, I think. Swiss franc is something you want to be on short term. You want to be on intraday charts, and you want to be kind of holding it maybe for a couple of days on the hourly time frame. Anything longer than that, I think position trading wise, it's a very hard thing to trade at the moment. So when we're nice and calm, when all the interest rates are gradually creeping up and all the economy is doing well and there's no conflict anywhere, same as everything else, isn't it? It's when we're in times like this where we've got Trump in charge who's upsetting everybody. We've got conflict flying off all over the place. World relationships changing. This thing is in demand, or it's not, and they dump it. Yeah, but it gets pumped and dumped so fast you can't do anything with it. If you get stuck the wrong side of it, you're stuffed. Yeah, as you saw with my Swiss yen, it's just not worth trying to trade it long term at the minute. So what I would like to see this week is a retest of those lows and potentially a break of them, but I'll be getting out at those lows if it gets there. But if not, I won't. Pound yen done. Pound New Zealand. So we are very range bound on this one. As you can see, monthly high, 2-month high, monthly low, 2-month low. We're stuck in a range. The range is contracting. Yeah, so we're in a symmetrical triangle situation at the moment where we are just contracting price. At some point, you cannot go until flatline. We will break. And it will start to move. So we're waiting for some news to change the directional bias of one of these substantially. There's nothing from the pound. We are not changing interest rates. Now, the New Zealanders, now their CPI numbers come out lower than forecast on a quarterly basis, they could drop interest rates, which means so for me, from a fundamental perspective, you want to be looking more for buy opportunities than sell at the moment, but that is forecasting that they will drop interest rates, which they may not. So you can see we're kind of a little bit more slightly bullish, but difficult. Thanks for the follow, whoever that was. Silver Wolf. Do you trade silver? WDS. I remember after the financial crisis, the big thing was long short portfolios. Reality is it added complexity and did not work. Anton Creel was big into it. Was he? Long short portfolios. Don't know. Not something I've looked into. Hasn't come across my radar, that one. But this is the thing, you know, that what you've kind of said there, Anton Creel was big into it, and he changed to it because the market conditions changed. And this is what I keep going on about all the time. You can't stay with the same strategy continuously because the market changes. Yeah, Trump's come in. We don't trade the same way as we did before Trump because this thing's not going to move the same. You have a different strategy for different market condition. The trick is trying to figure out what the market condition is going to be. That's where your time machine comes in. So, and this is why traders get lucky and strategies suddenly become popular, and then why everybody loses money. So you suddenly see this, you see cycles of strategies. All of a sudden, something will be hot on the internet, like Kiss Cam at Coldplay. It becomes hot on the internet, and then it disappears, it fizzles out. Why does it fizzle out? Because it doesn't work anymore, or it's not interesting anymore. Yeah, and it's the same with trading. Something will come around and suddenly it will work. And it will work because the market is shifted into a condition that meets that criteria. And then all of a sudden, something will change. Trump won't use tariffs anymore, and he will lose control of the Senate, or something. You know, something will happen that will shift the way that economics work. And all of a sudden, the market will move in a different way. Therefore, you start trading in a different way. Yeah, I said earlier about trend trading being an absolute load of rubbish. Best thing possible on the planet you can do with stock indices and with the Japanese yen. Until 8 months ago, now the Japanese yen, you can't trend trade it, but you could trend trade it for 4 years before. You wanted to be trend trading it. Since COVID, you wanted to be doing nothing but trend trade in the yen. You made millions. Now you won't make anything. You'll lose millions. Yeah, so you have to identify when markets shift, when the way things move shifts. I shifted from position trading much more into stock index trading 18 months, 2 years ago. Why? Because I identified it's different. It's moved. It's changed. The way the market moves now is different to what it was before COVID. Short-term intraday movement is more explosive on stock indices. So that's why I started trading this strategy. This isn't a new strategy. This isn't something I've come up with out of the blue and gone, hey, look, I've made this up. I was trading this 15 years ago. I stopped trading it because I started trading something else. This hasn't stopped working. It's always been working. There's people been doing this for the last 15 years. I just decided to get back into it because I did a load of back testing and thought this market suits this really well again now. So trade it. But at the end of the day, all trading strategies are risk reward based. As long as you've got a risk and the reward is higher, that's how you make your money. That's where your edges lie. You just don't know which strategy to use from day to day, week to week, month to month. That's the bit that everyone on YouTube will try and tell you they have it. Shorts into there, ideally, but could go either way. So the next interest rate decision for the New Zealand, I don't think is August the 20th. So we've got roughly a month until the next interest rate decision for New Zealand. So we should be dropping down to 3, I reckon. I reckon that's what they'll do next. So we should see weakness coming into that New Zealand dollar. Now, bear in mind, the market tends to preempt movement. So if we're going to drop interest rates at some point in the next month, the market will probably start to sell off some of its New Zealand holdings before it happens. Usually anything from 1 to 3 weeks, 4 weeks, maybe before the news event. That's when you start to see movement preempting it. So the market prices in interest rates. Then we get interest rate decisions. If they come out as forecast, the market has it right. Happy days. If they come out different to forecast, the market either has to sell more or buy more of it, depending on what that actual number comes out of, which is what we saw in the Australian dollar. We saw the Australians basically go, we are going to drop our interest rates. And then they went, actually, no, we're not. So the market had been factoring in that we were going to drop interest rates, and it didn't. So it popped, because they had to rebuy everything they've been selling. That's exactly what happens all the time with interest rate decisions. So that's your directional bias short term in the next month. Just flatlined anyway, aren't we? So there's no directional bias at all at the minute anyway. Right. New Zealand dollar, just kind of covered that one, but all the New Zealand dollar pairs potentially bearish. So continuations. So market structure, short. So looking for pops to sell, looking for propulsion gaps to sell, any ADR hits to the upside, potentially medium, long term, that's what we're looking for. Absolutely fine buying a double bottom bounce, but the news this morning has changed that potentially to a bearish stance. So if we break out of there, you got a long way to go before you're going to meet any kind. Look at this massive parabolic move. There's absolutely no support here until you get back down to this level here. So there's a hell of a long drop, 350 ADR roughly to the downside on it. So yeah, it looks really good for shorts. Be interesting to see what the sentiment system says about that. Have a quick look. Where are we? Neutral at the moment. Weak actually. 50-50. So yeah, market, I think you're going to find is going to shift sentiment, try and buy all of this. So, because they always get it wrong. So yeah, I'll be looking for sales on it. The slightly worrying thing with this is the market, and this is where trading becomes impossible. The one thing we cannot do as traders is time the market because we don't control that. It's controlled by the banks. So when I say this is likely to do that at some point in the next month, we've got 4 weeks until that happens. Yeah. So 1, 2, 3, 4. Yeah. You could have an entire week where we do this, and then the next week does something like that. Yeah. And then the next week can do that up in this propulsion gap. And then a week before the interest rates come out, they do that. Yeah. So this is where bias is absolutely useless to you as a trader, in that if I think they're going to drop interest rates, when are the banks going to move on that information? The banks could move on it from today, from next week, from the week after, or they might sit around and do nothing and then move 3 days before the event. You just don't know. Every single piece of information you have from an indicator or from a fundamental perspective is useless to you from a timing perspective. support resistance is usable as a timing instrument. So when you hit a level, now is the time to act. The direction is got to be decided by something else. Yeah. So if you hit a support, there's no point in using an RSI because you're using support as your condition. Your signal will be a reversal alert, but your condition is the resistance or the support. Or if there is no resistance or support, your condition can be the signal generated by the RSI. Fundamental direction or moving average bias for direction cannot help you time anything. It gives you a binary decision-making process of I want to go long or I want to go short. To time it, you have to use something else. And this is how systems are made. You have a condition indicator, you have a directional bias indicator, and then you have a signal indicator. If your bias is short, the condition is oversold, you get a reverse alert, that is your signal to go short. That is your timing. This is your condition, this is your direction, this is your signal. Yeah. So you've got to have multiple things at play in a strategy. So when I'm saying looks good for shorts at some point in the next 4 weeks, probably will be. And I can come out at any time and go, oh, do you see the size of that move? I told you it was going to go short. I don't know when, but when it does, I'll go, yeah, there you go. I told you so. But it's 50-50, isn't it? Of course, it's going to go short at some point. Anyway, New Zealand dollar CAD. So there's no directional bias on the Canadian dollar at the moment. It's bearish, really. So what we got is a bear against a bear, which equals sideways on this one, really. But there's no real direction or anything to do with it at the moment. Friday, you had a nice signal to go short. But New Zealand Swiss, again, Swiss franc, dodgy at the moment. But sideways, really. Nothing you can do with that at the minute. We've done the yen. The New Zealand dollar, US dollar, we're really in the middle of nowhere at the moment. This dollar's quite strong. So from a strength perspective, if you're looking for something to short against the dollar, the New Zealand dollar, US dollar's probably not, if you are selling this and buying that, obviously that is going to fly to the upside. So signals last week, obviously, to go long on it. So this isn't a bad thing to get into from a sort of a buy perspective at the moment. But I'd much rather be buying at 150 ADR with an RSI extension at support. That's your confluence. So nothing really exciting there at the moment. New Zealand dollar, US dollar CAD. So the dollar at the minute seems to be powering up. Seems to be. But again, it's flick of a switch from Trump at the moment. So that is really the direction I expect it to go in, but I don't expect it to go like that, parabolic, unless something changes. The dollar is weak long term because of what he's done with the economics. He's upset all of the trade balances everywhere. All the companies are in turmoil. The stock indices are in turmoil. You do not want to be buying a currency that is highly volatile. You want stability, and the dollar is not it at the moment. So although I think it's probably going to do okay, that's more because of a recovery than anything else. I think it'll recover, but not necessarily strong. So I kind of love this little W pattern we've got here. If we break that monthly high, it kind of confirms that we've got that higher high, higher low situation going on. So I'll be looking for buys on it. Both of these are oil, both of these are commodity based. Oil is obviously grinding as well to the upside. So it all looks good for buys on it. So looking for opportunities to the downside. But, as you can see, you had one here. You've had nothing on it on the hourly. So ADR hits to the downside, probably good intraday levels. So if you get an intraday ADR extension that isn't caused by a news event that causes the dollar to collapse, obviously, then that's worth a buy. But, with Trump moves as well, if Trump announces something that does that, buy it. Because all that Trump does is announce things before they happen. They haven't happened. It's market overreaction. So we covered again this in the member stream. We've got a member stream about how to trade Trump moves. It's very easy to do when you can see them and you can scalp them, but it's timing them is the difficult thing. US dollar Swiss is sideways at the moment. Again, Swiss franc, not keen on very much at the moment. Shorting this is very expensive. For me, it's long only. When you're longing against the Swiss franc, you always run that risk of a safe haven run killing you. So it's a difficult one to trade. You can see how strong the Swiss franc's been. And obviously this is weakness in the dollar as well. So it's a double bubble. So I think this is probably starting to roll over now. So extensions to the downside would be interested in. US dollar yen we've covered. Gold. Not moving anywhere. There we go. So there's all your FX pairs done. Nothing extended. Right, let's have a quick look at the indices. What a mess. We are just not going anywhere today. So it needs to make its mind up. So that propulsion, I don't like propulsion gaps on the DAX before the market opens. So, but it is holding. That one's holding as well. So feels like it wants to go long today, the market, but it's got no traction. So we'll see how we get on with that later. But yeah, just holding DAX short, FTSE long. As long as one of them breaks, be fine. If they don't, then it's going to be a $1,200 loss day. Morning, anyway. So yeah, so we'll see how we get on this afternoon. So US is a bit of a mixed bag. Look, Nasdaq's struggling. S&P's not doing bad. Dow's holding. Just nothing today, is there? As you'd expect, there's no news. So, it's a no news day. Who have we got earnings-wise today, just out of interest? Oh, wrong one. #21st. Verizon pre-market. That's it. So earnings doesn't really kick off till Wednesday. Google. Tesla aftermarket. That'll be an interesting one. Don't think that's going to be pretty. Yeah, next week's the big week. So yeah, this is kind of earnings fortnight's kind of turned into earnings 3 weeks, isn't it? Really. Right. Anybody got anything else they want to discuss? Look at? I've pretty much covered everything anyway. So yeah, just waiting to see what happens with these today. DAX now looks like it wants to go long. FTSE doesn't want to do anything. Fun. So I'll be back this afternoon at 2:30. We'll have a look at the US indices, see if we get any movement on those this afternoon. But as I said, there's no news scheduled. So keep your eyes peeled on the ADR dashboard and see if anything really presents itself as an intraday opportunity. Because if it gets to ADR, it's not because of news, it's because it's just managed to grind there, which means they'll probably take a profit on it at some point. So ADR is probably on no news days are your best indicator for opportunities on very extended conditions. Other than that, waiting for RSI extensions. But there's nothing really moving, is there? So one of those weeks, I think we might be sitting around until Thursday, but we'll see. So I'll be back this afternoon. There's a member stream on Wednesday morning. Then I'm back Wednesday afternoon. Same Friday morning, Friday afternoon as usual. I'm going to try and see if I can possibly squeeze in another member stream this week because I missed last week's because my internet went down. But hopefully this week we'll be able to cover the new website I've been working on with some guys and look at what you can do on that. But they've hit a little bit of a hurdle with the membership system on it. So it's fun, isn't it? Developing. You just hit hurdle after hurdle. All developing is bug fixing, basically, on a grand scale. So what you do is you build something and then you try and fix all the bugs. You forget about everything that's working. It's a bit like trading, isn't it? A bit like position trading. If something's working out, we just take the money. If something's not working out, we focus on it. Exactly the same as building software. You build it. If it all works, you forget about it. If it doesn't work, you focus on it. So they've hit a problem with the membership system where it's suddenly broken. They can't upgrade memberships. Not that it's live, but obviously for testing purposes, which is what I was going to give it to the members for, you need to be able to kind of use it, don't you? So hopefully they'll have that fixed by Wednesday. Right, so I'll leave it there. Anything you need, let me know. I'll be in Discord or Telegram. Other than that, I'm back this afternoon, and we will see how we get on with the US indices. Doesn't look like we're going to get any money out of these this morning. So fingers crossed we can make it back on the afternoon session. All right, have a good one. Anything you need, let me know. Other than that, I will see you next time.